Yo, Paimon's Bulletin fam, get ready for a whirlwind of news. We've got Morgan Stanley and Goldman Sachs dropping insights on Tencent and Alibaba's AI dominance. Next up, Tencent Investments is cashing in big on two massive deals, raking in billions. Then, we dive into why Tencent is hitting the bond market for billions, and what that means for their AI spending. And finally, we'll break down Tencent's strategic financial moves that are echoing tech giants like Apple. Stick around, you don't want to miss this. Hit that subscribe button and ring the notification bell. Wall Street's AI verdict, Tencent versus Alibaba. When it comes to the booming AI race in China, two titans are leading the charge, but with very different strategies. Morgan Stanley is singing the praises of Tencent, calling it the undisputed champion in 2C AI applications, thanks to its powerhouse WeChat ecosystem and robust cloud business. They've even slapped an overweight rating on Tencent with a HKD 700 target price. Meanwhile, Goldman Sachs is putting its chips on Alibaba, highlighting its cutting-edge model capabilities, a massive 47% share of China's public cloud market, and a diverse chip supply chain as key strengths for 2B AI dominance and global expansion. Goldman Sachs has even boosted Alibaba's target price to $179. These aren't just opinions, they're backed by data. Tencent's AI investments are already paying off, driving significant revenue increases in marketing and gaming. Their comprehensive AI product matrix, from enterprise solutions to consumer-facing apps like Yuan, shows a deep commitment. Alibaba, on the other hand, is capitalizing on the explosive growth of enterprise AI, with massive token consumption and a strong foothold in Fortune China 500 companies. This battle for AI supremacy between Tencent and Alibaba is reshaping the tech landscape, with each company leveraging its unique strengths to conquer the future. But what does this mean for the average user and the broader market? Stay tuned as we explore the ripple effects of these AI power plays and what's next for these tech giants. Tencent's billion-dollar wins, consumer investments pay off. Remember when consumer investments were looked down upon? Well, Tencent Investments is here to prove them wrong, pocketing a staggering 10 billion yuan from just two deals. First up, Amer Sports, the parent company of luxury outdoor brand Arc'teryx. Tencent was part of the consortium that acquired Amer Sports back in 2019, and now, with the company's successful IPO and soaring stock price, Tencent has cashed in with a massive profit, reportedly exceeding 5 billion yuan. It seems owning an Arc'teryx jacket is not just a status symbol, but also a smart investment. Then there's Lao Pu Gold, a company that few investors initially bet on. Tencent stepped in as a cornerstone investor before its IPO, and guess what? Lao Pu Gold's stock price has skyrocketed since then, giving Tencent another paper profit of over HK$ 5 billion. These aren't just lucky breaks. They showcase Tencent's sharp eye for consumer trends and its ability to identify high-growth potential even in overlooked markets. This success story is a powerful reminder that smart consumer investments can indeed yield enormous profits, even in today's shifting economic climate. But Tencent's financial wizardry doesn't stop there. Get ready to hear about their latest move that's making waves in the bond market. Tencent's Yuan bond Bonanza, billions raised amidst AI spending shift. In a significant financial maneuver, Tencent Holdings has successfully raised a massive 9 billion yuan, approximately $1.27 billion, through a multi-tranche offshore yuan bond deal. This fundraising effort saw them issuing 5, 10, and even 30-year bonds, with final pricing coming in tighter than initially expected, indicating strong investor confidence. This move comes at a fascinating time, as Tencent is strategically reining in its capital expenditure, particularly in artificial intelligence. We're seeing a clear trend. Spending on AI dropped significantly from Q4 2024 to Q2 2025, moving from 36.6 billion yuan down to 19.1 billion yuan. Executives have signaled a more measured approach, focusing on the sustainable monetization of their AI projects. This bond issuance, therefore, isn't necessarily about fueling more AI spending right now, but rather about optimizing their financial structure and potentially refinancing existing obligations or supporting other strategic initiatives, all while navigating a more cautious investment phase in AI development. But why is Tencent, a company known for its deep cash reserves, suddenly issuing bonds? We're about to uncover the surprising reasons behind this strategic move. Tencent borrows billions, a strategic play for shareholder value. Tencent, a company often seen as a cash-rich titan, has re-entered the bond market after a 4-year hiatus, issuing 9 billion yuan in dim sum bonds. This move has sparked considerable market speculation. Is Tencent suddenly short on cash? While some point to potential debt refinancing, a closer look at Tencent's robust free cash flow suggests otherwise. In fact, their cash flow significantly exceeds their total debt. So, what's the real reason? The prevailing theory is that Tencent is strategically optimizing its capital structure, much like tech giants such as Apple. By issuing bonds at favorable low RMB interest rates, they can potentially replace higher-cost US dollar debt and, more significantly, support their massive share buyback program. Tencent has been aggressively buying back its own shares this year, a strategy that, similar to Apple's playbook, can boost earnings per share, EPS, and enhance shareholder value. This isn't just about borrowing. It's a sophisticated financial maneuver aimed at maximizing returns and signaling financial strength to the market. From AI battles to billion-dollar investments and strategic borrowing, Tencent is certainly keeping us on our toes. Join us after the break for a rapid-fire recap of all today's top stories. And that's a wrap on today's Paimon's Bulletin. We saw Morgan Stanley and Goldman Sachs weigh in on Tencent and Alibaba's AI strategies. Tencent Investments is proving consumer plays can be huge winners, raking in billions from Amer Sports and Lao Pu Gold. Tencent has also hit the bond market for 9 billion yuan, signaling a shift in AI spending and a strategic financial approach. Finally, we explored Tencent's borrowing strategy, drawing parallels with Apple's playbook for shareholder value. Don't forget to smash that like button, subscribe to Paimon's Bulletin for all your essential news updates, and ring that notification bell so you never miss an episode. Follow us on all our socials for more exclusive content. We'll see you in the next one.